Good morning. I wanted to record a quick video to show you basically how I view the markets and what has been working for me at a pretty high clip. So instead of using support and resistance, I prefer to look at candlesticks and the candlestick anatomy and blend that with smart money concepts as far as order blocks and imbalances. Now, there are several videos on YouTube that will explain these concepts, okay? Let me go to my history here. I'm going to give you some references to look up order blocks. There's a video here, Order Blocks in 3 Minutes by Smart Money Academy. She's brilliant when it comes to her trading. She's a little bit arrogant, but that's fine. She probably deserves to be a little arrogant. There's another video by Track FX, order blocks, everything you need to know about order blocks. It's also a short video where he breaks down order blocks. He uses order blocks more in line with the way I use order blocks. There are different ways to use order blocks, much like there's different ways to use a lot of these different tools, okay? So I'm going to explain to you and give you examples of the way I use order blocks and how it works for me, okay? This is not the only way to view it, but you have to understand that consistency is the first step towards success, okay? So I want to go to GU. I use Oanda charts. I use the same charts all the time for consistency purposes. Okay, just because I don't want to mess up my current markings, we're gonna go way back to some random point on the charts. This also is beneficial because you can see that this concept is not isolated to anything that just happened, okay? So let's talk about price action and what healthy price action looks like versus unhealthy price action. So we want to take a three candle evaluation. This is the first candle. It's a little doji. We want the second candle. If it starts up here, we want the wick to come down, right? We want that wick to come down as far as this wick of this first candle that came on. So you got the first candle, second candle, third candle. What healthy price action would look like is this candle is overlapped by this candle, which is perfect. This third candle, the wick needs to come down, and I will draw it. It needs to come down to this level. So when you put a line, put your line through here, this candle touches the same level that this candle touches. The wicks touch. That will be healthy price action. Since it doesn't, it leaves what traders call an imbalance or a fair market value gap. So what this is showing you as a trader is that the market was so saturated with buyers that the sellers did not get a chance to participate in the market, okay? Um, this happens when people put in big orders. When I say people, it's institutions, banks, you know, people with big money who are buying or selling at this level. Okay. And what you want to watch for is sometime in the future for price to come back into that level and mitigate the imbalance. Now, those who know about imbalances will understand that once this imbalance is mitigated to the 50% range, it is considered a closed imbalance. And this wick pushes in about halfway into this imbalance. And if you don't believe me, you can break out the Gann box. If you don't know what a Gann box is, here's a Gann box. I'll go from make this bigger. All right, as you can see, this Gann box goes from this wick to this wick. I'm going to put a line through the 50% mark. Get this horizontal ray, 50% mark, and you can see this wick touches 50%. So this imbalance is considered closed. But that's what you want to see as a trader. And that's what you have to understand when it comes to price action. Everything on the chart you want to use as a trader. You want to understand as a trader. So as this price continues up, all this is healthy price action. Then you get to this area and you have an order block here, okay? You guys learn support and resistance. I trade off order blocks. And let me explain to you. In this little area, with the naked eye, I see one order block, two order blocks, three order blocks. So what is an order block? Okay, again, I showed you some videos that will reference it. A very simple term is the last up candle before the down move. All right, the last up candle before the down move, and then the last red candle before the up move. Bear with me, I know this is not a red candle, but if you understand time zone correlations, you can drop down a time frame, and I guarantee you there will be a red candle at some point, whether that's the 8-hour chart or the 4-hour chart. Oh, I forgot that I picked some random spot. Okay. I think I'm in a different spot of the market now. Okay, it doesn't matter. Everything that I explained to you, it's still valid. So trading order blocks is more simple because there is a basic concept when it comes to these order blocks. Whenever I see an order block, the way I trade this order block is I put a box around the order block. Rectangular box. This is my order block. I don't use the wicks, okay? Now it's up to you as a trader to use wicks if you want to. If you don't, then that's totally up to you. Just make sure you're consistent, you know, when you trade, okay? So I want to cover this little wick on this box, all right? Because when price respects this order block, this wick on this green candle, the one that broke structure to the upside. What do you mean break structure, Todd? If it broke the top of this red box, this red candle here, it broke structure to the upside. I know what you're thinking, but Todd, this is not structure. This is one candle. Bear with me. We're on a daily chart. If you drop down to the 4 hour, this is structure. There are several candles in here that make up a whole day. This is a day's candle right here. So it's several candles in here. This candle, the next day, broke structure to the top side. Here's the structure. It broke structure. It's an order block. All right. Not only is it an order block, but it's an important order block. It's an order block that we can trade off of. The same way this green candle is an order block and it breaks structure down. If you put a box around here, you can trade down off of this. And let me show you. You put a box around it. Want to erase the next day. This is the day at the 5 o'clock Central, 5 o'clock East Coast time. This is what you're going to see. You identify this order block at the close of the market. You can come over here and you can put you a long tool. The stop loss is the bottom of the order block. Your take profit. All right, you're going to partial out at the top of this green candle. Smart money says that what you want to see is this candle pull back into this order block, tap you in, and then go back up. Once it gets to the back up to the top, you can take partial, right? You can take a partial of your trade. So this is a 2% mark. You want to make sure that you at least get, you close out 1% of your trade or whatever. I risk 1% per trade. When it comes back up to the top, I'm going to take at least 0.25% off, right? So if price comes back down here and takes me out, I won't lose any money. That's basically what I want to do. Now, if price continues to go on, this would be my final take profit. So this is about 190 pips. It's a almost 4-to-1 ratio. That would be a great trade for me. And just so we can keep track, I'm going to go ahead and put my take profit line here, and we'll play this thing out. Oh, it can't be connected. Wow. Okay, so I'm having some technical difficulties here. Okay, so it's pulling back and stop. We'll stop it right there. It hit our take profit. So I know that was kind of quick, but let's look and see what happened. So you can see that this trade played out, right? It hit our take profit. So I'm going to go ahead and delete this so we can talk about it. Okay. So just like I showed you, we had drew out our order block. The next day, the very next day, this kind of pushed up. It came all the way back into our order block. All right. It almost pushed all the way to the bottom of our order block, but no problem. It brought us in the trade. It came back up. Price closed here. The third day, it tapped back into our order block. It hit take profit 1, as well as take profit 2. So we could have closed out or hold the trade, right? It really depends on you. as a trader. So I'm a swing trader. As you can see, this is a day chart. This trade has already taken 1, 2 days. So I'm still going to hold this trade because there has not been a reversal signal. Okay. And we'll talk about that. A reversal signal is a bearish order block, or order block that forms this green candle maybe, and then a bearish red candle will be an order block. But just for S and Gs, you can close out at 190 pips, or you can hold for further. Okay. Now this is in a vacuum, and I would have normally done a top-down analysis from the monthly chart to the daily chart, and I'll show you all that in a minute. But let's just play this out and see how far it goes. Okay, so again, I mean, this could have been very lucrative. We have 1, 2, 3, 4. After day 5, five days, you're up 352 pips. So I think you get the concept, okay? And let's talk about this price action. These wicks mitigate any imbalance, all right? This wick goes up here. You want to see this wick, it covered, all right? That's good. This wick comes here. This candle mitigates this one, okay? This wick comes here. So what we want to see, I didn't even have to use another one. We want to see on this candle, we want to see price come back down to at least our line and keep going. Let's pay attention. Perfect. That's good price action. This is our first bearish candle. So we have decisions to make. Price is here. What I want to see is another order block created here. And what do I mean? Well, I want to see a green candle that breaks this structure to the top side. If I get that, I know that the market is going to continue to move. All right. If it pushes back down, then I'll know it's time to kill this trade. Now, you can have your stop loss at your 190 pip mark, or maybe you took profit, and you weren't what they call greedy. Okay. But again, we'll play it out and see. We'll see what we get. Okay, so we're out of the trade. Now, on the lower time frames in this area, you would see a bearish order block, okay? I can't switch time frames now because I'm in reversal mode, it's not showing. But that's the basic concept of how I trade these markets, okay? I'm a swing trader, so I always look and take my trades off the daily chart. It's low maintenance. I can look at the charts once per day. At the end of the day, when they have that 1 hour close session, I can look at all my charts and all my setups. So I don't need a bunch of lines and busyness on my chart, okay? At the end of the month, I look at the monthly. At the end of the week, I look at the weekly. And at the end of the day, I look at the daily, okay? And I'll put information on my chart as it makes itself available to me. What I want to do here, I'm going to clear this chart out, and I'm going to take you through what I do since today is Saturday and it's a weekend. I'm going to look at the monthly chart just because you're here. And what I like to do is called framing the market, okay? I want to know where the high is, and I want to know where the low is, okay? So when I look at order blocks, I want you to understand that really this whole candle, wick and all, is part of the order block, okay? I don't use them when I trade. So there are people out there that will use this entire order block. But I want to see where we are in this market. And this is a monthly chart. So GU is very low here, guys, very low. And this price is going to run up. But what I want to find is where the top of the market is right now. And the highest order block I see up here is this area, right? If you notice this month, we've broken through the top of this order block. See how that wick broke through it? Once the top of this order block is broken, it's called a violation. This order block is no longer valid. This is an invalid order block. So that pushes the top of the market up. So this is the top. Where's the bottom of my market? I don't see any order blocks on the monthly. I would have to drop down. This is a weekly. And right off the top of my head, I see this order block here. Last down candle before the up candle. I'm going to go ahead and frame this joker. So I understand that this area is where my trades are going to take place. Not down here, not up here, okay? Whenever I look at this area, I want to make sure that I have a good enough area for my trades to run. I can make more money, okay? Sometimes when you frame the trades, you only have about, I don't know, 10 to 50 pips. Those are the trades that I stay away from. Not, I mean, the market is going to have to break out either way when you get in that situation, but why do I want to guess when this layup and this easy trade setup is right in front of my face? Okay, so this is where the good stuff comes. So right off the top of my head, I can condense this market. All right, I put the box around the monthly, and here's the weekly. Well, if you look closer, there's an order block up here. So you want to move the frame of your market up, right? So this area got a little bit smaller, but it's cool. I think it's setting up perfectly. There's a bearish order block right here. Did you notice that? Since we have a bearish order block, we can frame that. This trade is getting easier. This is telling me that the market is going to push down this week, okay? The same way you see this order block in the next candle, you want it to push into this order block and keep going up, or you see this order block, this next candle pushes into the order block, moves up, it actually violates or invalidates this order block, but it pushes in here and it goes up. Then you have, well, this is not an order block on this time frame, but price goes all the way up to the top. In this wick, there's an order block that pushes down. All right, here's an order block. The next candle pushes in and goes up. Just like you see all this, you want to see the same thing on the bearish side, okay? You want to see a bearish order block established. You want to see the price push into this bearish order block and push down. Okay, here's where the work starts for me. I want to know how far I can expect price to push into this bearish order block before I can take a trade to go down. There's a very simple way that I do that. I use the Fibonacci. I trace this one red candle, this last bearish candle, and I have my golden zone, which is the 50%. From the 50% to the 61.8, I put a little box in there. I delete the fib. This is where I can look to get into a trade, all right? Because I'm aware that banks don't want to get involved until it retraces at least 50%. Then they'll start pushing this sucker down. Now, does it always have to be 50%? No, it doesn't. But let's just take this trade, all right? This is an order block. I think we can agree. We can recognize this as an order block. I would have done the same thing. I would have taken my fib and put it on this one candle. Take it across. I want to see how far we can expect this price to push back. I would have put my box at the 50% mark. I would have deleted my fib. And instead of me waiting for price to push all the way back into this order block, I would have been looking for price to push back into this area. And guess what? It would have picked me up perfectly, and I would have still been able to get this trade, even though price didn't push back into my order block. So banks won't get involved unless the price moves back 50%, okay? It can move back further than the 50% mark, but this is where you want to start looking for your price. I'm not gonna look for an entry as soon as it touches my order block in this case. I'm gonna look for an entry in my golden zone. This also allows me to get a much more profitable trade, okay? So if I put a short tool on here, and remember, this is a weekly setup. So if I put a short tool on here and covered the entire order block, that's a 100 pip stop loss. And I can take this trade. Remember, you're going to partial out at this first high right here, 37 pips, 100 pip stop loss, doesn't work, okay? Your next point of interest will be this 157 mark, and then this 200 pip mark. Wouldn't it be better if you can protect just this area? You have a 22 pip stop loss on a weekly trade that gets you 225 pips. That's a 10 to 1. This is the trade that I want to be in. It's a 10 to 1. If I risk 1% and this trade pans out, I made 10% on my account. So if you have a $10,000 account and you risk $100, after this trade, you'll have $1,000 profit. Not too bad, not too bad. And that's just one entry. If you have multiple entries on this trade, which you should, because this is a weekly setup, it might take a week, it might take 2 weeks, it might take 3 weeks, but you should have several entries. You should have several more entries that pay, I mean, a 10 to 1 RR. So let's drop down to the daily chart. We have our trade set up framed, okay? We have it framed. So this is what we want to see when the market opens tomorrow afternoon or tomorrow night. We want to see this trade push back up into our area. Once it gets here, we can drop down to the 15-minute time frame, right? And we want to see rejection candles forming in here. Once we see our rejection candles and the price reverses, it breaks structure to the downside, then we can hop in this trade and we can take it down, you know. And once this trade starts going, all we have to do is monitor our trade. I use the 4-hour chart I use the 4-hour pullbacks to add entries, okay? So I'm sure there will be a lot of questions, but you can contact me and I will further explain. Yes, this is a bearish order block. So in order to get to our range, price would have to violate this bearish order block. As a trader, always be cognizant of where your order blocks are. So seeing this order block here makes me wonder if price will even get to this area. All right. This entire area, this in purple, is a monthly order block. It's an order block on a monthly time frame, which means there are trillions of dollars sitting in this area. So the market may not have a need to push back this high in order to get enough orders to sell all the way down. Okay. Price was selling down. They put in an order block here, which is trillions of dollars, and then price pushed away from it. It needs to retrace back into this area to push down. So maybe price just pushes into this area. So maybe I need to adjust my trade if I start seeing rejections in this area. Just something to be cognizant of as a trader. Now, if you get into a trade and it pushes down, look at all these areas to the right. This is a daily order block. Price will have to push through that. As a matter of fact, price came to this order block and now it's rejecting. So it's going to go back. What smart money traders do is if price stops in this order block area, then all we have to do is protect. Our stop loss goes at the top of this order block, right? This will be our first take profit. This high right here. This high will be the second take profit. This high and this order block will be a third take profit. This will be your fourth take profit. And that's where I really need to end my trade here, because this is about a 200 pip gain. All right. If this plays out like this, this is a 1 to 12 RR. Okay. If it goes up further, it might be a little bit more. You just have to, or actually it'd be a little bit less, because this stop loss is a lot larger than this stop loss. This is a 16 pip stop loss. This other one was a 22 pip stop loss. So it's all about market awareness, where your order blocks are. You guys use support and resistance, but support and resistance doesn't really exist. It's these order blocks. You would call this a level of support. I call this an order block. You call this a level of support. I call that an order block. So go back, watch your videos, see if this makes sense. Also, this is January 22nd, January 23rd, GU will sell, guarantee you that. And it will be probably a 200 pip move. Let's measure. Let me take that back. I don't know if it'll be a 200 pip move. Let me see. What are you doing, Todd? All right, I'm putting the Fibonacci from this impulse move to the top because I want to see where this pullback will be. So the golden zone starts at the 50% mark, which is right here. That's 121 pips. The middle of the golden zone would be 167 pips, and the end of the golden zone and the start of this order block is 190 pips. So 190 pips is a 1 to 11 in this scenario. That's a good trade, okay? The start of the golden zone is a 1 to 7. That's 7%. That's a great trade. So anywhere in this area, right, you can look for price to reverse. There are some guys out there that will tell you that, you know, they look for the trade to come all the way down to the 78.6. If it does come that far in this case, that will give us a 1 to 17, which is awesome. I'll never complain about that. But I think realistically, we can look for 190, so a pip, we can look for a change somewhere in this golden zone. That's where I would look for a reversal. And if I see a reversal, if If I see price stalling out in this zone, I'm taking my profit. All right. So good luck to you. That's how I look at the charts. This is how I use my tools and order blocks and imbalances to show me where the market is going. I don't guess about with support and resistance and guess which way the market is going. I wait for the market to give me a bullish order block, which means a red candle before a green candle that breaks the structure, the top of the red candle. That's a bullish order block. You can frame it and you can try to get in the trade on the next candle. The same way on the bearish side. All right, you want to see a red candle going down. You want to see a green candle in the middle and another red candle going down. There's your order block. If you guys traded with me on Friday, you would have taken this sell move anyway, right? Because once this order block was established, you put a box around it. The Friday candle tapped you in and it sold down. I caught this trade along with a couple others, AU as well, and the GB, the GJ, the JPY pairs also. So it was a great week for me. Last week is going to be a great week again this week. And this is one of the trades that I'm going to jump into. I want to talk to you a little bit about this EU trade that I published on my TradingView account. If you trade retail, we're all retail traders, right? We're not banks, we're not institutions. But if you use things like trend lines, this is how you get yourself in trouble. Because you can see this is a nice little trend line that's being established here. Price comes down here, you would have got in for a buy at this trend line, and you would have made you a little money, okay? Problem with that is, if we go to the weekly chart, TradingView, EU, EUR, USD. Problem with this trend line is if we take it to the weekly chart, guys, we got a hot darn bearish order block right here. That means that this price is about to collapse. It's going to sell on you. And if you fell in love with this trend line for the last few days, right? Because this is a day chart. I mean, you could have traded this channel right here since November 24th. You could have put a top on this, and you've been trading this channel probably with success. You're probably bragging. And the problem is you took a long right here and you're trying to get to the top of this channel. You're never going to see it, buddy. You're never going to see it. Price is retracing, right? You see that green candle is coming up. But, fellas, it's only coming up into this order block, and then it's going to cook back off, right? Much in the same way that I just showed you that GU trade is going to work out. And if you frame your market from the top down, you'll know that this area down here is your monthly order blocks, right? So this market has been framed. If you were in this market back in May, you could have traded EU from this point all the way down to this point. How many pips is that, guys? You could have traded this down 900 pips, 950 pips. How different would your life be? How different would your trading account be if you had traded this all the way down, right? Just based off these order blocks, guys. I mean, this is not, I'm not making this up. You see it. You see it. You could have traded all the way down, right? Now price is playing with you, setting you up for the okie doke. And it's about to get you one last cook-off. Just imagine how many people have been trading this since November. The market has lulled them to sleep. Imagine how much money is located right beneath these trend lines. What I mean by money, I mean stop losses. How many guys have their stop losses here and they've been cashing in a check based off this market movement since November? All of those guys are about to get taken for their money, because as soon as this happens, this market is going to push down. I would probably think it's going to push down pretty strongly and take out these jokers, and it's going to take them all out. So this ought to be a good week for a short trade on Euro USD. That's all I have for you guys. If you need to get in contact with me, don't hesitate to drop me a line. Reach me on Instagram at the letters IC, number 4, the letter X, clearly. IC4X clearly. And you guys have a good one. Enjoy yourselves. Make this money.